Good afternoon, guys. Let's see. Sally's excuse today, Max. Not here. Elliot here. Jalian here. Nico. Not yet. Val here, Andrew here, Tom here, Olivia here, nobody here, Rosie, Jake here, Dallas here. Yeah, I've seen you, like, didn't skip you. All right, let's talk about international equity markets. Let's kind of first look at, you guys know what's going on today? Anything special going on in the market or economy? It's Fed meeting day. So let's see what the market is expecting. Actually, without going into Excel, there's a sheet. There's a website called Fed Watch Tool. It's a page prepared by CME. I don't necessarily agree with their methodology, but it's close enough. Current Fed funds rate target range is 525 to 550. And they're market is basically expecting that Fed's not going to do anything. They're attaching a 96% probability, no, 98.8% probability that Fed won't do anything. Next meeting is on 13th of December. Again, 75% probability Fed's not going to do anything. A quarter, it may increase. The one after that in January. Essentially, markets not expecting much of a move. If anything, starting mid-year 2024, there's a good chance that Fed could actually decrease the interest rates. Whether or not that will happen is besides the point, but that's how the market is pricing things. And we're going to find out at 2 o'clock what the Fed has done. If there's a surprise interest hike, that's going to crash the markets quite a bit, but Fed typically does not want to surprise the market. All right, let's talk about international equity markets, basically stock markets. Why would we talk about international stock markets differently? What's the main difference between the US stock markets and foreign stock markets? What do you think? If you were an investor, what would have been the first thing that comes to your mind? Investing into a company, let's say in Malaysia versus US. What would be the first thing you would think about? There's no right or wrong answer. I just want to know what you think. And the rest of the stuff you can read from the book. You don't need me for that. Or you simply say, I don't care about those nasty foreigners. I'm not even interested. That's okay too. There is nothing particularly wrong with that. Who would want to put some international stocks into their portfolio? I understand you don't have much money now. That's the point of education, so that you can get a good job and get money, but at some point you will earn money and save for retirement. So who would want to put in some international stocks? Just raise of hands. Guys, it's okay to show an opinion. There is nothing wrong with that. Dallas wants. Anybody else?
I might try it, but I would put like a lot of
Okay. Okay, you just want to try. How about you, Dallas? Why would you put some money?
I guess like I want to like diversify like my range of stock options.
Exactly. One of the points of investing into different asset classes in general is to diversify. The stock markets of different countries do not rise and fall all at the same time. I mean, they are correlated, but there's no perfect correlation. If U.S. market goes up by 10%, that doesn't mean the German market is going to go up by 10%. Okay? Or U.S. goes down by 20, Germany may not go down by 20. Just for the hell of it, let's download some simple data. Let's see. FinanceYahoo.com. Let's get data for SPY, which is an ETF for S&P 500, representing the essentially U.S. stock market. Historical data, I'm going to do it max. Let's do it monthly. And I'm going to download the data. Let's see. And I'm going to calculate the returns. When you download data from Yahoo Finance, the number that you want to use to calculate returns is adjusted close. Adjusted close divided by last month adjusted close minus 1. Let's do the same thing. There's an ETF that's kind of an index of let's see. Okay, let's use the EFA. This tracks the market cap weighted index of developed market securities based on Europe, Australia, and Far East. It excludes US, Canada, and small caps. So it's kind of an overall international portfolio. So let's get the EFA. Again, I'm going to get historical data for that. Download. There is one more ETF I'm going to look at, EEM. This is an ETF for emerging markets. And if you want to look at the country ratings, you can look at it. Index of emerging markets. These are countries like, China, Korea, Malaysia, Taiwan, what have you. There's a lot of China, Korea, and Taiwan in this thing. It's in a sense they're different risk classes. Let's get the historical data for that too. Come on. I forgot to open the FR1. Let's calculate the returns for them. Come on.